What keeps you up at night? What would you say is the biggest risk when you look at the year ahead?
Oh, it's the debt sustainability issue, the implications of running 7% deficits on, I guess there is this constant statement, even when Jerome Powell gets asked about this, to say our current level of debt is sustainable, but it's on an unsustainable path. For me, the real issue there is it creates an inflationary impulse, and then the second order effect is it's a negative for productivity to have government spending running at 24% of GDP rather than its 50-year average of more like 20% of GDP. Had Harris been elected, there was a very low probability that we would have gone off that 24% trajectory. And just to provide a little bit of perspective, government spending, as I mentioned, has averaged 20% of GDP since 1980. My view on this was there was a tacit agreement between the two parties that if there was a recession, they could elevate it to 23, 24%, but then they were supposed to take it back down to 20 once the recession was over. We've been at 24 for 3 years. The CBO projects it to stay at 24. This is the key issue, and a big element of the supposed Trump trade was this idea that the back end of the bond market was going to really sell off hard. So if I thought about the first part of the year and whether the greater risk was another growth scare like we had in August, where we truly get worried about earnings. We could talk about that divergence between earnings and revisions and stock prices right now, which is pretty big. But the risk of a growth scare versus the risk of a disorderly sell-off in the bond market, say 10-year yields going back to 4 3/4 or 5, I think that latter risk is much higher. And it really does depend on the sequencing of policy, tax versus trade policy, spending cuts, and how they're integrated into the making Tax Cuts and Jobs Act tax rates permanent. That whole policy, all those steps are pretty risky.
But Barry, if you step back and look at, spending cuts, everybody wants to cut spending. Everybody thinks that government spending is out of control, right? Everybody wants to reduce the deficit. What is it, $36 trillion
Something like that
right now?
Is the debt.
But I don't understand the total debt. I don't understand how Scott Bessent plans to take the deficit down to 3%, how Donald Trump plans to have Elon Musk and Vivek Ramaswamy cut government spending by $2 trillion and still grow the economy by 3%. How can you remove that much fiscal stimulus, effectively put on such a huge fiscal break, and still grow the economy?
Yeah, so my view is that the probability of growth accelerating next year, or even Bessent hitting the second of his third arrows next year, is reasonably low. It's unlikely to accelerate. It may actually contract, as you said, but the mix matters. Right? The mix matters a lot. We had an 80 basis point contribution from government spending last quarter. That is not a positive for our long-term productivity outlook.
True. But I still don't understand. These policies look like they're going to increase inflation and stunt growth.
Right. But if you look at what's gone on with capital spending, so spending on software even, which has been just straight up to the right for decades, software spending has decelerated decidedly. So has equipment spending. So has infrastructure or structures, physical plant. There's a big business confidence boost that's taken place as a consequence of the election. And if you look at things like the regional Fed surveys, both services and manufacturing, the 6-month forward cap spending plans are quite strong right now. So you need that tax certainty, regulatory policy, and then you start realizing it, and then you get an 80 basis point or 100 basis point contribution from capital spending that replaces the government spending. Now, again, it may not be one for one, but if you think about the outlook for corporate earnings, capital spending, strong capital spending, is far better for corporate earnings than government spending, other than a few isolated sectors. So if let's say we keep consumption relatively constant, we reduce government spending, but you get private sector capital spending to accelerate, even if the total growth rate is even a little lower than it is now.
It's a better mix.
It's a better mix for, S&P 500 companies, for small cap companies, for the corporate sector.
For our society.